This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. David is joined by financial advisor Brad Starken to unpack how stablecoins, ETFs, and crypto adoption are reshaping the financial landscape. They explore how these innovations could impact treasuries, cross-border payments, and even 401k allocations, while highlighting both the opportunities and risks for investors.
Joining me in the studio once again is our resident authority on all things cryptocurrency, digital assets, advisor extraordinaire, Brad Starken. How are we doing, Brad?
I'm doing good, thank you.
I hear we've had some late nights with the little ones. That's some of the life of being a girl dad with a couple of little ones at the home. How old are your girls now?
Yeah, so 18 months and 5 years old, and my youngest Summer liked to grace us with her presence last night, so I think I spent more time awake than asleep.
Well, do your duty. It'll be gone soon. Enjoy every moment because they get old fast, right?
That's right. That's right.
So listen, while you're coming in, we've got one of our digital asset classes become very popular coming up. We'll talk about that in a moment when that is. But I just want to kind of jump to, holy cow, this administration has gone all in on crypto, if you will. But the big news that I see is the Federal Reserve last week cut interest rates, and the concern there is, okay, we're cutting interest rates. What if inflation gets out of control? There's all kinds of scariness. The back end of the yield curve could go up. But these stable coins, right, which are basically cryptocurrency backed by the U.S. dollar, could be a savior to the U.S. Treasury, right?
Absolutely.
Because if they're going to launch, and we'll talk about the value of the main cryptocurrency out there, Bitcoin, in a minute, how much is out there and how much is in these ETFs that launched, I guess, a year and a half ago. But if these stable coins really take hold, and it looks like they're going to, they are almost an unlimited buyer of long-dated treasuries because they have to back up they're backed by dollars, but they'll trade in value every day, but they're going to be backed by these treasuries. So if you have a guaranteed buyer, that may suppress yields, right?
That could very well happen. With all these stable coins that are coming out, typically they're going to be backed on a one-for-one basis with the U.S. dollars.
So if they bought a treasury that's already trading, if they bought on the secondary market at a discount because rates shot up here recently, and let's say they were to buy it at 98 cents, but they back $1, that makes them have some reserve capital to go buy some more treasuries, right? So active management in these things, I think, would be critical. But and again, let's dial back because I know I'm just jumping in here, but these stable coins are really going to allow cross-border transactions for international monetary exchanges. International shipments can get paid in a blink of an eye, even faster than that technically, right?
Yes.
Instead of 3 bank wires around the world to make sure payment got done, and way less expense in accounting fees, et cetera, right?
Yeah, in theory, when you're looking at this, you're talking you could potentially move millions of dollars for pennies on the dollar as it sits right now, and quite frankly, in seconds on something, which is where we need to be in the 21st.
Efficiency is good for economic growth, right?
Yes.
Sometimes there's some disruption in there, and companies, I'm not saying it's these companies, but companies like Visa and MasterCard that kind of had a stranglehold on financial transactions, they've been disrupted by companies like Square and Stripe, and this is just kind of taking that to the next step and facilitating transactions even quicker.
Well, quicker and more cost efficient, right? So, I'm even seeing it when we go to some local restaurants here, just in town here in Omaha, that if you want to pay with a credit card, there's a 3 or even a 4% credit card transaction fee that now
on top of a 3% restaurant tax that was supposed to be temporary. But I'm sorry, that's not our story today.
Correct. So all the fees, which we could do things faster, more efficient, and for less in fees, which I think would benefit everyone.
Well, yeah, because that makes companies have more liquidity, more profit, which means they can spend more money to grow market share, buy advertising, hire employees, whatever it may be. That benefits the economy. So in the end, that's a good thing, but there'll be some disruptions. Some companies are going to be slow adopters and they may get left behind. We're not going to make those choices today, but so that's fantastic on there. Now let's flip back to cryptocurrency. So, well, first of all, the stablecoin ones, we're now having their first ETF for one of those that's tracking like XRP, I think, right?
Yeah, so that will track XRP. So that technically won't be a stablecoin, but there's talks of that within the financial markets in that area. But, this is going to be a spot ETF. So there's a big difference when you start looking and doing research from spot ETFs
versus a tracking
to future
ETF,
trading
right?
ETFs.
Futures trading, kind of tracking the volume, right?
The spot ETFs, which are, when we look at the Bitcoin and Ethereum ones, they're going to track that on a dollar for dollar basis. Now, the difference is the cryptocurrency markets trades 24/7, where our financial markets are just Monday through Friday, right? And from 8:30 in the morning till 3 in the afternoon. So obviously Central Time, but so they should track on a spot level as those kind of go up or go down through the course of time. But yes, looking right now is, XRP is going to be getting launched here. And it just shows that there's going to be a lot more adoption coming. And I believe, there's a lot more filings for other cryptocurrencies and digital assets out there to have these spot ETFs. Really just so you don't have to go out to either Coinbase or Robinhood to buy these individually, right? And have them on your own wallet and store those however you want to store it. This way you can actually buy it through potentially, whether you're at Fidelity or wherever you're at, you can actually buy those in your investment accounts.
So much more mainstream. I mean, that's the reality, right? Well, and we've talked about crypto for years because it's fascinating us. You and I have personally invested in crypto. You're way more active, of course, than I am. Of course, I'm still grateful once in a while you give me a little, hey, you might want to look at But these are not the type of tools traditionally we're using for retirement planning for the majority of our clients. But we're able to get some exposure, and we've benefited greatly from that exposure when the SEC allowed the first launches of the exchange-traded funds that are owning Bitcoin and Ethereum, et cetera, and Bitcoin being the biggest. But now there's 12 of them. We tasked you when they launched. There were, I think it was 5 the original launch and then the subsequent ones. Yep. To which one, and we liked Fidelity's just because Fidelity mined their own Bitcoin. They had the inventory themselves. It wasn't, but anyway.
Yeah, since 2014.
We're not making recommendations, but the 12 ETFs, this is value. You hand me a piece of paper before we recorded this. Those 12 ETFs, so make sure I'm getting this right, are now owning 1.315 million Bitcoin. There's only 19 million Bitcoin available, right? Because
like
21 million in the max, but the waste or whatever that was already gone, it's estimated to be about 19 million. Is that right?
Yeah, 19.8 so far has been mined, but there could be lost along the way.
So that's almost 7%, just under 7%, if that my math is right.
Yeah, very, very close.
All Bitcoin is in these 12 ETFs, and they've only been trading for not even 2 years.
January of 24. So that's about $151 billion in this space, just in these ETFs alone. Pretty fascinating.
That really is. I mean, well, that's just telling you how real the uptake of this is and how it's going to have to be something that is in most clients' allocations in some form. Again, younger clients are going to be much more comfortable with this in reality because it's something they're seeing or doing or trading, et cetera. But you don't have to necessarily do this trading like on the exchanges like Coinbase, et cetera, which we do believe Coinbase to be a pretty reputable exchange where people do this. But you're now going to have this pretty regularly be part of portfolios you'll see when you work with independent financial advisors. I would assume we allocate a small percentage to it.
Yeah.
So if that really takes hold, because I think we're just in the infancy, then these numbers could get pretty. That's going to create demand basically, which is going to keep that price at least some kind of level, if you will, under the bottom of that price. I mean, you track these prices pretty good. Bitcoin is 110,000 somewhere in there. I don't even know.
Yeah, right around 115 is what we're looking at. But definitely a very volatile asset. And this is I
remember it was like $114 when I first learned about it. I was like, yeah, that's not for me.
Yeah, but right now with this pro administration as it sits. Future, there's a potential for these options to be in your 401k allocations as well. Now that doesn't exist today, but that's a possibility down the road.
That's coming. They passed the act. They're trying to let what we call alternative investments. This would qualify under that have typically been withheld for what we call accredited investors. And just so you know, that means you make at least $200,000 a year, or you have $1 million in liquid assets. That's the definition. But now, if they're going to let this into the 401k, and there's good reason, by the way, to do it. The problem is, I hope people understand how to risk allocate, and that's the scary part on their own, because this should not typically be the whole kit and caboodle, the whole shebang, right? There should be a small portion or allocation of that. But that is where wealth is created. Unique asset classes, truly diversified asset classes, and all kinds of alternatives. High net worth people, families that have more than 25 million, and I know that's a small portion of our audience, but we work with those clients too. It's over 53% on average of their investable assets are in alternative investments that are not liquid. They own hedge funds, private credit. They own cryptocurrencies that they don't need to worry about the day-to-day price action because they have more wealth than they're ever going to need for income. And so it allows them to, attribute more wealth. And if you're a fan of pro sports is the same thing. And now private equity is penetrating professional sports in a very quick way. I talked about it last year. I bought an investment personally that gave me a sliver of the Buffalo Bills. And we're going to see more and more of that coming down the line because that's the only media, at least that's left on TV, in my opinion, that's really has value to it, right?
Yes.
And the Super Bowl commercials just keep going up in value for a reason. Those are eyes on. You don't watch the Super Bowl tape delayed. That's not like a DVR event, right? You kind of have to see it live because once the score's known, But so live sports are really, really changing the game and how media is delivered. And those are alt investments, just like these cryptocurrencies. And I think it's interesting if you go to most of these sports stadiums, they have Bitcoin ETFs now, right?
Yes, and you're going to see them
sponsoring. We have one or two here in
sponsoring.
Omaha, right?
Yes.
So, I mean, it's becoming a real thing. It's coming real adoption. All right, we've got a class explaining this and so much more on digital assets. When is that class?
It's going to be October 7th at 6:30 p.m. here at our Midwest Learning Center at our office here at Retire
So
Smart.
you need to register for it, 402-369-7777, or just go to retiresmartnow.com and click on attend an event page, look for the digital asset class, and register because it is limited seating. Brad, I know we're out of time this week. Thank you so much for dropping in. I hope you get some sleep.
Thank you.
All right.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week.